Hi friends, today we can start with the problem of recording of transaction. How an accountant in a company would be identifying the transaction and recording the same in the books. It's what we term as journalizing. So we can start with the problem. So first transaction here, 1st Jan 2024, ABC started business with cash 100,000. So last video we already discussed when the accountant gets a transaction. First of all, he has to find out the two aspects. In every transaction, there should be at least two aspects or more than two aspects. So first he has to find out the aspect, then he has to find out the ledger grouping, then grouping for debit and credit, then the effect, and after that the action to be taken. So we can analyze first transaction. ABC started business with the cash. Now started with cash means this is capital, the amount introduced by the owner for starting the business. So one account is capital. Secondly, what the business is getting? Business is getting cash from the owner. So cash balance is getting increased. So the two accounts are capital and cash. Other way we can say like business. For accounting purpose, it's a separate legal entity, which is a separate legal person, which takes money from the owner for doing the business. The concept is like that, for doing the business and return the capital with profit. So capital is like a liability, but it is not like normal liability. Why? Because normal liability we have to pay off the obligation within the within a time frame like 30 days or 60 days, whatever the credit period agreed with the other party. But capital is, though it's a liability, it has not to be paid on a time frame. It can be paid on liquidation of the company. That's why it's a kind of liability, but not liability that it is termed as capital for the purpose of account grouping. So for the business, one liability comes into picture and it is getting money. So capital is the liability and cash is the other aspect, two aspect, the dual aspect concept. Now we have to analyze capital is in which account group. It's in capital. There are 6 category, out of which capital is also a category. Capital. Second, cash. We already told in the last video, cash is a resource used for running the business. Resource comes under which category? It comes under assets. So the grouping is assets. Now, what is the grouping of capital for debit and credit? Asset comes under debit. Assets comes under debit. Liability comes under credit. Liability comes under credit. Now effect means what's happening with this transaction in the company. Capital, we discussed, company is getting money from the owner, that a liability is getting generated. It should be paid sometime. So it's a liability which is getting increased, Assets, cash. Upon getting the money, the cash balance of the business is getting increased. Now we have to check what action, the kind of recording the accountant has to record. So it is increased, it is credit. So credit, for increase, what we have to do? We have to credit. Action is for capital is credit. Then assets. Asset is also increasing. So rule of debit, it should be debit. Now we can record the transaction. First of all, we know there should be a column for date, then particulars, ledger folio, debit, credit. So first we have to put the date. Then, as we already discussed, the debit aspect should be recorded first, which is cash account debtor. Amount should be in debit column. Why? Because we are debiting. To the credit aspect, we are writing after a space prefix with to capital account. It should be in credit column. Then a narration, capital introduced or business started. So first transaction is over. Now we can go to the next transaction. Opened a bank account with State Bank of India, SBI. Now for the business, the two aspects. First it comes to bank. Now analyzing the transaction is like the cash balance in the business getting decreased. Why? Because we are opening the bank account, that we are depositing some money into our bank account. So our bank account balance is getting increased and cash balance getting decreased. So the two accounts are, first is bank, second is cash. Now the account grouping for bank is also, bank balance in bank is a resource unless it's a loan from bank. Here it is not a loan, we have just opened an account with the depositing money. So it's the category comes to assets. Cash we already discussed, it is assets. The assets, the grouping is under debit. Effect is like bank balance is getting increased but cash balance is getting decreased. Now the action should be, now the action should be like bank balance increasing, asset balance is increasing. So what we have to do, we have to debit cash. It's an asset, but what's happening, the balance is getting decreased. So what we have to do, we have to credit. Now the entry, first of all, date. Debit aspect was SBI bank account, or we can write like bank account debtor if the company is having only one bank account. Bank account debtor, amount is 30,000 to cash account. Narration should be opened a bank account with SBI. Next transaction, purchased goods from Ashu. Here the two aspects should be, we are getting inventory for making sale. Now in case of purchase, which is for selling, the account we are using to record the transaction is purchases. In practical point of view, when we use integrated accounting in the software, we just select the purchase voucher, automatically it would be hitting inventory. That is the way software works. But for exam purpose, for the purpose of +1 accounting, the basic exam thing, we are using the account called purchase. For students, you should follow creating a purchase account whenever we buy something which is intended to sell. So purchase, and it is told like that it is from Ashu. It is not telling whether we paid the cash or we paid by way of check. If it is not telling in the question how the payment is making, it should be assumed that it's a credit purchase, means we can make the payment after some time as per the agreement with the supplier. So upon buying, we have to pay the supplier. It's a liability. This guy is called creditor. Now purchase is the way we are getting inventory. Inventory is getting increased, but we are recording in purchase. Same way we are actually creating a liability which has to be paid. It's a liability, but liability to whom? ASHU. It would be a company name or a person's name, no issue. Purchase. Purchase comes under which category? Drawings? No. Drawings is withdrawal by the owner. Asset? No. It is not a resource. Purchasing. Expense. It is coming under expense. In practical point of view, the account we will be selecting is inventory. In such a scenario, it should be asset. In both the scenario, asset or expense, it comes under debit only. So the treatment, the effect of entry in both scenario will be same. Now ASHU, we told it's a creditor, it's a liability. So it's a liability. Now expense or asset, it is debit. Liability should be in credit. What's happening on purchase? Purchase, the expense is getting increased. If it is inventory, the inventory balance is getting increased. ASHU, it's a liability because we are buying on credit. We have to make the payment. So till payment, it's a liability. ASHU company is a liability for us. Liability is getting increased. Now, per expense, it is getting increased that we have to debit. Then ASHU is a liability. For liability, for increasing, we need to credit. Date is 4th. Debit account is purchases. To ASHU account. Credit purchase from ASHU. Now the next transaction is sold goods to Rahul for cash. When we do the regular activity of the business, which is buying and making sale. On buying, we are creating the account called purchase. So on selling, it will be sales. It will be sales. So the transaction is we are making a sale. Then we are selling. What we are getting, it is clearly specifying it is for cash. So we are getting cash on sale. So the second account is cash. Now sales. Sales is in the nature. The nature is revenue. It's not capital, it's not drawings, it's not liability, it's not assets, it's not expense. So it is revenue. Cash is already we know asset. Now revenue is in which category? It's in credit. It's in credit. Cash is debit, we already know. It's an asset. Sales, one sale is getting created, one sale is generated. So sales is getting increased. Cash is also getting increased because we are getting cash. Rule is for credit on increase. For credit and on increase, we need to credit. For debit increase, debit account increase, we need to debit. So the entry is cash account debtor 20 to sales. Narration cash sales. Now, for some people, there should be some doubt, like there is a guy called Rahul. Though the name is there, we don't have any dealing, like there is no pending amount from him or we need to pay this guy. Why? Because upon sale, he makes the payment. That we are not supposed to record this guy's name by creating an account, because he gave the money upon sale. So that's why we are not considering him. If in the question it is not mentioning for cash, then on cash place Rahul will come. Then he will be called as debtor. He needs to pay money to us. We are making a credit sale. Now next transaction. Bought goods from Tara for cash. The opposite of the last transaction. Bought goods. We are buying for selling. So the account is purchases. We already did the entry. But here it is clearly specifying it's for cash. It's not credit. So the second account is we are getting inventory, that is purchases account. We are paying cash. We are getting decreased. I mean the cash balance is getting decreased. Purchase is which category? It is expenses. Cash we know asset. Expenses. It is in which category? It's in debit. Cash is debit, we know. On purchase, inventory is getting increased. The purchase account is getting increased. Cash is getting decreased. Now the rule. It is expense and it is increasing, that we need to debit. Cash is getting decreased. So we need to credit. So the entry we already got. Purchases to cash account being cash purchases. Now see the difference here. In last purchase we wrote ASHU. Why? Because question is not specifying whether we are making payment by way of cash or check. But here it is clearly specified for cash. If we make the payment by way of cash, there is no liability. That's why we are taking cash. Why? Because at the same time of purchase, we are paying the money. But in last transaction, even though we purchase, we are not making payment, that a liability is getting generated. That is the difference. Next transaction, sold goods to Suman. Selling and buying, if it is not mentioning the payment mode, it is cash or check, obviously it should be taken as on credit basis. Now this transaction, sold goods to Suman, it's a credit sale. Credit sale means the customer will be making the payment after some time. Based on the credit period, we are agreeing with the customer. It may be 30 days, 60 days, 90 days, like that. So the two accounts are, we are giving inventory. Inventory is getting decreased. Since it is the business activity, that we are telling this account, I mean the name of this account will be sales. We are getting cash? No. We are getting an asset. Why? Because the customer needs to pay the money. So the customer balance is in this credit transaction, it's an asset. This guy is called sundry debtor or accounts receivable or trade receivable, whatever name we can give, no issue. So sales is one thing. Second is Suman. Why we are recording Suman? Because Suman has to pay this money after some time, after the credit period. So one is sales another is Suman. Now sales comes under revenue. Suman is the guy who has to make payment to us, that it's a resource, so it's an asset. Comes under sales, comes under which category? Revenue comes under which category? It is under credit. Suman is asset. Asset is in which category? Debit. Now sales, by way of sales, sale is getting increased. Now Suman's balance getting increased. A receivable is getting generated, so it is increasing. Now the rule: credit increase, credit increase. What we have to do? We have to credit. Debit increase, increasing debit account, we need to debit. So the entry debit aspect was Suman. Date is 13th. Suman account debtor 20,000 to sales, being credit sale to Suman. If it is not, if it is saying like sold goods to Suman for cash, means then Suman should be replaced by cash account, but it is not mentioning. If it is saying like sold goods to Suman by way of check, then instead of Suman we will write SBI bank account. Next transaction: received check from Suman 19,500 and discount allowed 500. Now we can analyze the transaction like 20,000 was the receivable amount from Suman, but we allowed a discount of 500, that they made a payment by way of check for rupees 19,500. Now we have to analyze the transaction like we are getting a check, means our bank balance is getting increased. Why? Because we are depositing the check to bank. So one account is bank. Now Suman was the party, customer, who makes the payment, that upon payment the asset is getting converted into cash. So Suman account is getting nullified upon this payment. Now there is called discount allowed. We are giving a discount. Discount is an expense for the company. Why? Because in order to promote the sale or for getting the payment as early as possible. When we have some urgent requirement, we can ask the debtor to make the payment early so that we can provide you with some discount. So in this transaction, there are three aspects, or we can analyze like this. I'll tell you. Bank account, the category is asset. Suman in this question is asset. Why? Because it was receivable. It was receivable. So it's an asset. Credit, category of asset is always debit. Bank balance getting increased. Suman's balance, the receivable, is getting decreased. Why? Because he is making the payment. Now we need to analyze like debit increase. Debit account getting increase, we need to debit. Suman account is getting decreased, we need to credit. Now we can analyze the trade transaction after writing the entry. Date is 16. Debit account is bank. Now my question is, how much we are receiving in bank? 20,000 or 19,500? It should be 19,500. It is clearly written, received check from Suman. Now, as far as Suman is concerned, her liability fully getting nullified. So Suman account is how much? 20,000. So the 500, what is happening? This is the way we are finding out if there is third aspect is there or not. Now we have to write like discount is the third aspect. Now discount comes under which category? Expense. Expense is under which category? Debit. Now upon giving discount, an expense is getting increased in our books of account. The company incurs an expense, increasing. What is the rule of increase in case of debit account? We need to debit. So in this entry, this is what we termed as compound entry, more than two aspects. Compound entry, 2 debit and 1 credit. So the debit should be recorded first. Discount account debtor. How much? See the beauty. Debit is 20,000, credit is 20,000. Now next transaction. Check given to Ashu on account. Why? Because we purchased for 20,000 and check is giving for 10,000 only. No issue. Balance we will be paying later. Anyway. We forget to write the narration. Check received and discount allowed. Now what was the transaction? The transaction was check given to Ashu. So once we give the check to the party, our bank balance is getting decreased. So first account is bank. First account is bank. Ashu, we are giving to Ashu. Ashu was our creditor. Ashu was a liability because we purchased on credit. Second account is Ashu account in this question. Now, bank is asset we know. Ashu in this question was a liability. Why? Because we purchased the goods on credit. It's a liability. Now, asset comes under debit, but liability comes under credit. Now, effect is like bank balance is increasing or decreasing. It's getting decreased. Why? Because we are making a drawing a check in favor of Ashu. And the liability is getting increased or decreased. It is getting decreased. Why? Because we are making the payment. 20,000 was the credit purchase amount. No, it was 10,000. It was 20,000. The liability is getting decreased. Now, debit account decrease. Debit account decrease. Debit account decrease. We need to credit. Credit account decrease. Credit account decrease. We need to debit. So the first entry will be 20th Jan. Debit aspect was Ashu account. How much check amount? It was 10,000 to bank account. Check paid to Ashu. Next transaction, rent paid by check. Rent is an expense for running the business. So rent is the one account getting affected. By check means our bank balance getting decreased. Bank. Rent comes under which category? It comes under expenses. Bank is asset in this question. Asset. Why? Because it's not a loan account. If it is loan, we will be writing liability account. Here it is an asset. Expense comes under which category? Debit. Asset comes under which category? Same, debit. Expense is getting increased or decreased? It's getting increased. One expense is getting registered. Bank balance getting decreased. Now the entry will be debit aspect increasing, debit account increasing, we need to debit. Debit aspect decreasing, we need to credit. So the entry will be, the date will be 22nd. Debit account is rent account, amount was 2000, credit was bank 2000, rent paid by check. Next transaction, machine purchased from Parigya. Now last video we already discussed this transaction. For our example purpose, we are buying a machinery. Now the concept is like machinery we are buying not for selling, general concept. That's why it would not be coming under purchases, but it's a new asset. The name is machinery. It is written like there is, it is not mentioned like whether by way of cash or check. So it is our assumption is like it is on credit. On credit means we need to pay this guy Parigya. So it's a liability for us. Parigya. Parigya is the account. Machinery comes under, machinery is a resource for running the business. So it's an asset. It's an asset. Parigya. Parigya is for our business, it's a liability because we buy the machinery on credit. We need to make the payment at a later time. That a liability is getting generated. Asset comes under debit, but liability comes under credit. Machinery getting increased, liability is also getting increased. A new liability is coming in our books. Rule, debit increase, increase debit, we need to debit. Increase credit, credit aspect to increase, we need to credit. So the entry is machinery account debtor 10,000 to Parigya, being machinery purchased on credit. Next entry, check issued to Parigya. After 3 days, we issued a check to Parigya. So upon issuing the check, bank balance getting decreased. So the account, one account is bank and liability is getting paid off. So bank asset we know, Parigya in this question, it is our liability. Why? Because we purchased machinery on credit. So it's a liability. Asset comes under debit, we know. Asset comes under debit, we know. Liability comes under credit, we know. Upon payment, bank balance is getting decreased. Upon payment, liability also getting decreased. Now, for debit account decrease, we need to credit. For credit account decrease, we need to debit. So the entry is Parigya account debit 10,000 to bank. Being check paid. To Parigya. Next transaction, paid salary. Salary is an expense, you know. Now for expense and income, no, it is clearly written paid salary, means we paid the salary. Since it is not mentioning by way of check, it should be cash. It should be cash. So salary, an expense is created and we are making cash payment, that our cash balance is getting decreased. Salary is an expense. Salary is an expense. Cash, we know it's an asset. Both is having same aspect. See, asset and expense comes under debit category. Salary upon payment, a new expense is coming in our books. An expense is getting increased. Upon payment of cash, cash balance is getting decreased. Debit increase. Debit increase, we need to debit. Debit decrease. Debit decrease. Debit account decrease. We need to credit. So the entry is salary account debtor to cash. So this is the way we need to record the transaction. There is no that much technicality, provided you have an understanding of the 6 group of accounts in a company. In every company, all the transaction, the accounts or aspect comes under only this 6 category. And you should thorough about the classification for debit and credit, like asset, which one debit, drawings or dividend expense comes under debit, but capital, liability or sales revenue comes under credit. Then you should know the rule of debit and credit accounts. So when there is a transaction, we need to find out the two aspects, dual aspect concept, because accountant is supposed to record two aspects. Like we already told, transactions are like give and take. We are giving something, we are getting something. That's what been in a way termed as debit and credit. So we are recording both take and both give. So in transaction, there should be something giving, something we are getting. We are recording both, like what we are giving and what we are getting, both we are recording by way of debit and credit, but it depends upon the category in which it is coming. Like if it is coming under debit category, it should be like increase we are debiting, decrease we are crediting. But if it is comes under credit category, for increase we credit and for decrease we debit. So in a company, in practical scenario also, once the accountant is getting a transaction, he should clearly get the two aspects, minimum two aspects. Then he needs to understand which account group it is coming. It is expense, is it liability, is it capital, is it revenue, is it asset. Then he should understand the classification for debit and credit, like asset which is comes under debit category, but liability comes under credit. Then the effect of transaction, what's happening with the transaction, like salary, it's an expense which is getting increased. Then for cash in this transaction, once we make salary, our cash balance is getting decreased. Then we need to analyze like debit increase, debit account which is getting increased means we need to debit. But asset account, debit account, but decreasing, for decrease we need to credit. Debit aspect we have to record first by putting debtor at the end, and it should be in the debit column. But credit aspect we should be recording after a space by prefixing to in this one. So friends, I think you understood what we actually discussed. It is not that much complicated. This is the base. From here you should be starting recording the transaction. It is what an accountant is also doing in a company. So just practice the problem. If any entry you are not understanding the concept of this debit and credit, let me know by way of message. We can wind up for the day. So for any query, please message. Okay then, bye bye.